大家好，今天是2025年8月15日，我们快速的分享大摩中国首席邢自强昨天在彭博社的一个访谈，他更新了中国经济和市场的最新情况，英文采访干货更多。他表示，中国经济正逐步向消费导向转型，政策方向正确，但节奏渐进。大白话说呢，就是没有那么快，也没有大的政策包，方向是对的，要有耐心。最近的热点 A 股上涨，他表示上涨主要是由流动性驱动，称为水牛行情，而非基本面驱动。他说，消费贷款的补贴政策间接降低资金投入股市的成本，这一句话非常重要，不用话术翻译过来，就是消费贷开始流入股市了。有路子的可以尝试啊，当然要风险可控。反内卷效果怎么样？后面需要观察几个关键信号。第一个，下游 PPI 和核心服务 CPI 的回暖。第二，企业利润和工资逐步上升。第三，消费占 GDP 比重的提升。第四，社会保障覆盖更多的人群。出口方面，上半年出口集中增长，就是所谓的抢出口导致的，但下半年因全球关税上升，尤其对中国及贸易壁垒增加，出口将面临较大压力。政策展望总结一句话，当前政策为初步的步骤，非根本性变革，需保持耐心观察政策的协调与执行效果。最重要的，我们重复一下，就是消费贷开始流入股市了。这个玩法呢，对大部分散户其实不太适合，即使有人要玩，我们也强烈建议你们不要做个股，而是 ETF。 好，要点我们就分享到这里，接下来是完整版。这里是大佬透镜，我们致力于过滤垃圾信息，挖掘优质内容，欢迎订阅转发常来。
Well, if you take a step back, connecting the dots, this is a part of their journey to gradually tilt towards consumption. So you heard so much about anti-involution in last 2 months, but we know to do this anti-involution just based on supply cleanup is not enough. You have to boost the demand. And so far we have seen so many small steps, but the right direction. The fertility support, about 100 billion yuan. The free preschool education, another 30 billion yuan. And the most recent one, today's announcement of the subsidy on consumer loan. So connecting the dots, they are gradually shifting towards consumption. That's definitely positive for the macro narrative.
I can't help but think when someone mentions personal loans, right, it's almost up to the consumer what to do with that money. And, I think part of what they mentioned here, big ticket items, autos are part of that. You could also take a personal loan out and put it in the stock market, right? If you think about it, it's almost subsidizing the cost of putting your money in the stock market. What do you make of what consumer behavior is right now? What are people doing with their money in China, which to some extent has gone into the equity market? What does that tell you about consumer behavior?
Yes, David, you mentioned a very new but very important factor. Liquidity is in driver's seat. Talking about consumers, they put so much money in the term deposit in the last 3-4 years. But right now, China's long-term rates are very low. Liquidity is quite abundant. We see some early signs, be it institutions like lifers, asset managers, or consumers. They are gradually shifting away from bond or term deposits into equity-linked exposure. So this is still early, but it's real. However, this is more about liquidity-driven grind higher for the equity market. In the Chinese investors dictionary, they call it water buffalo. So slightly different from conventional fundamental-driven bull market. The fundamental-wise reality check is not great. Deflation is here to stay, and the data will be soft in the second half. We had too much front-loading of exports, of fiscal impulse in the first half. So second half, we will see paybacks. That's why I think it's very important to see, can they combine the supply-side cleanup, anti-involution, with demand stimulus. And these small steps, they are small, but moving in the right direction. So I think, Yvonne and David, you have had me here maybe 3 or 4 times since late last year. First September period, 2024.
It's almost
they
12 months.
started to tackle the deflation directly. Then January, February this year, the so-called comeback of animal spirit. Jack Ma is back, this DeepSeek moment. Then this summer, anti-involution. I think every round if you are cynical, you can say these are not a game changer. These are only baby steps on the shooting. But every round, it helps the narrative on China keeps evolving, keeps improving. So connecting the dots, I think, is definitely positive.
I want to get your take on, you still think, though, despite what we're hearing on anti-involution, that your base case of persistent deflation is going to here to stay into 2026. Yeah. Why? Yeah. What are you seeing? I mean, we're seeing prices come up in the upstream side of things. Where else? How does this all play out in terms of inflation, or lack of thereof?
Anti-involution means try to put an end to destructive competition. So the aims are clear: stopping these subsidy races, try to allocate more efficiently, and try to gradually tilt towards consumption. But this is not 2016. In 2016, supply-side reform achieved a big success because it was only in upstream sector. Overcapacity was only in steel, coal, a few upstream state-owned sectors. Today's pressure sits in downstream sector, private new economy sector. So it's much more complex. You can't do a mandate of cutting capacity. You have to do it in a measured, market-first move. And that means you have to be patient. And right now, there are a lot of rhetorics. But the rhetorics turns into rules, at least several months lag. So we have to be patient. I'm not changing our PPI or CPI forecast for the rest of this year. But within 12 months, if they can use the fourth plenum in late October this year to address some of these fundamental problems, like try to set up a unified national market, shifting the tax system towards one that rewards efficiency and income, and change the local government incentives from rewarding output to rewarding household well-being. If they use 5-year plan in the fourth plenum to address these issues, I think finally these pieces fall into place. This story will upgrade from a so-called water buffalo into a fundamental-driven reflation.
The issue, as you point out, is markets can be impatient every now and then. You know, markets tend to move quicker than the economy, and in this specific case, likely going to move quicker than the inflation print comes out. So you have a fantastic diagram here. I wish I could show this to viewers here of just help us understand what the base case reflation path looks like. What is a durable exit from deflation here, and when do we get to that point?
3 signs. First is price indicators broadening firm, not just the upstream PPI. Upstream is easier. You can do consolidation among SOEs. But it's about the downstream PPI and the core services CPI. So that's number 1. Number 2 is corporate profits and wages inching up. So people start to find the good jobs because firms start to hire. Last but not least, consumption as percentage of GDP going up, because social safety net is being deepened, covering more and more migrant workers and farmers, so people feel safer to spend. That's the 3 signs to judge if this is a success for China's anti-involution.
Okay, so that's the path to reflation. What's the path to tariffs? I mean, we're starting to get more of these trade deals between the U.S. and North Asia and maybe parts of the region here. We're still waiting for some sort of trade deal with China, but it seems like we're seeing lower tariffs for the rest of the world versus China. Is China going to end up in a weaker position in all of this?
Well, I do agree with you. Uncertainties is here to stay, and this extension of the U.S.-China truce is a pause, not a peace. So if you look at the global endpoint tariffs, they are drifting up, and the tariff on China, as you said, is higher than most other trading partners. This means in the first half of the year, you got too much front-loaded exports. But the keywords for the second half will be paybacks, not mentioning this tariff uncertainty will probably weigh on global capex. So China's exports is going to flatten, and that external tailwind is going to convert into headwind in the second half for economic activities. But will U.S. and China go back to that prohibitive embargo level of escalation back in April? That's very unlikely. The U.S. reliance on Chinese supply chain is real, and Beijing has been playing the real earth card. Yeah. So I think, yes, there could be some bumps, but a complete breakdown is unlikely.
One view that's emerged this week was, Chinese exports will find their way into a market. I'll use your analogy on water. Water will find its way, right? And I wonder what your view is on, fine, there might be payback on the U.S. front, but at some point those exports are going to find another market for them.
Because they're still cheaper.
Because they're still cheaper and better.
Yeah.
Yeah, I saw a great chart from you guys on, the Chinese exports to different regions. To the U.S. is down, to ASEAN and a lot of other regions went up, showing the evidence of transshipment, right?
Yeah.
So it's up to corporates how they navigate these tariff and uncertainties with their own resilience and diversification of supply chain. But for Chinese jobs, for Chinese output, if you have transshipment, it's still bad for the Chinese own jobs and the output, right? Because that basically means you have to at least allocate a bit more of your process of manufacturing in other countries to avoid further tariffs. So I think China needs to focus on domestic consumption, and all these anti-involution need to be combined with clean up in the supply side plus demand stimulus. That's the only way to address all this global uncertainty on tariffs.